All right, so I'm here to provide some clarity, hopefully, on what I'm thinking about the market. So I know that a lot of people are confused because I went from the mooniest of moon boys to all of a sudden a doom poster. This is always going to be the case. I'm always going to be bullish at the top. It's kind of just an inevitability when you're a trend trader. So the same thesis, the same confidence, the same conviction, the same system, everything is exactly the same. And all of that has me bullish at the top, but it also has me bullish since. Really quick, I just want to give a shout out to the sponsor of this video, Coin Market Manager, the lead journaling and analytics tool for crypto traders. Connect an exchange account via read-only API for fully automated imports, saving you hundreds of hours of manual data entry. Analyze your trading habits in just a few clicks and improve strategies with data-driven insights. Link in the description below. Since breaking out of this range, reclaiming 4-hour 200 moving averages, forming a high, low, higher high on the daily chart. That's why I flip basically max bullish. Around that time, I was saying, oh, so I get to turn my brain off and target top right corner towards infinity, just like I did all the way back in October, right? And that's exactly what happened, right? So that's exactly why I do that and why I said that. Those significant events are determining my confidence in the trend. So here's the trend, right? And then here's us, reclaiming 4-hour 200s. My confidence does this, right? So we kind of peak. As soon as we lock in that event, my confidence has peaked and it has plateaued. So that means that at 73K, when I'm bull posting, like crazy, I am just as bullish as what I was at 45K. And I would hope that if you go back 2 months and you go look at, my Twitter timeline, my feed, what I was saying at the time, my sentiment very much reflects that. So I am just as adamantly bullish, from those lows or from structural shifts, from significant events occurring on high timeframes, as I am at the highs. And that's what it means to be a trend trader. I have conviction in my system and I have conviction in my beliefs in the way that I perceive the market. And I position early, right? Early relative to the greater trend, I would hope. And then if the market is luxurious to me and, very kind, we get 60% rally, 70% rally in the span of 2 months, right? I can't expect that every single time, but man, when it works, is it, amazing. Here's what most people do. As price goes higher, they get more convicted. As price goes lower, they get less convicted. Higher, you gain confidence, lower, you lose confidence. And it just mirrors whatever price is doing. Your confidence mirrors it. So what eventually ends up happening is the trend breaks once, right? So the trend breaks down and you are all the way up here because your confidence has mirrored trend. It has mirrored the price action. So as price goes higher, you're getting more and more convinced that, oh shit, we really are in a bull market. This really is the euphoria. We really are going to 500K. We really are, and then life cycle of a turkey, you give it all back, right? When you swing yourself, that momentum swings all the way to the highs. It's just like markets, it's just like anything in life. When you swing that momentum all the way to the highs, that return to the norm, that mean reversion is going to see a proportional kind of downswing. So think about it like a diver diving into a pool, right? The higher that they jump, the deeper that they're going to go into the water once they hit the water. I don't know. That's kind of how I'm thinking about it, right? So you can't allow yourself to be swayed by the y-axis changing. I don't really care about that. I got a question about, am I more convinced that we are going to downtrend now that we rejected off of the 4-hour 200s? No, I don't need price action to confirm my idea, right? I don't need that to happen. I have a thesis. It works out for about 2.5 months. It plays out to, let's say, 66%. And then that thesis breaks, and it only breaks once. There's only ever one time where we lose 4-hour 200s and we put in a lower low on our daily market structure. Right? There's only one time that happens in this entire 2-month 65% uptrend. So that is what allows me to start to sway my bias and change the way that I'm positioned in the market. And then from there, it's not like I only have the ability to think in extremes. And now that we're, breaking down below 4-hour 200s and breaking daily market structure at 65K, I'm just going to throw my arms up in the air and say, oh, well, we're going to zero. That's not how that works, right? We have to apply context. So the context of this market is, yes, we're still in a bull market. We're still in a very bullish environment. Here's the issue that I have with that. The issue that I have is people will tell me, wow, you're using 4-hour 200s to portray, a high time frame bias. That's cute. Haha, 4 hours high time frame. Well, what you failed to realize is that the 4-hour 200s are really just moving averages because they're a lagging indicator. They're always going to portray the trend for the time frame higher. So hourly 200s are going to portray like a 4-hour market structure. 4-hour 200s are going to portray like a daily market structure. Daily 200s are going to portray a weekly market structure. People are literally telling me this. We're losing 4-hour 200s. Haha, that's cute. Zoom out to the weekly, zoom out to the monthly. And here's the issue, is that they're right. They're absolutely right. They have applied the contextual kind of analysis. Hey, this is happening on the short term, but here's what's happening on, the high time frame. The issue is when we break down below 4-hour 200s, I'm not going to zoom in, just bear with me. When we break down below 4-hour 200s all the way back in this bull market, the previous cycle, we lose that trend. We break the market structure bearishly. We lose the 60K demand zone. So when we're doing all those things, I come out and I say, oh, you know what? I know that I was bullish at the top. I was also bullish for the entirety of the trend on the way into the top. Let's, not forget that. But everyone seems to forget it. I get, called the idiot that was bullish at the top, whatever. Oh yeah, but I'm bearish now. Just so you guys know, I'm bearish now. And people come out and they say, you're bearish now? Dude, do you not know that the weekly market structure is still bullish? And here's the issue with that. Where does that analysis get invalidated? Right there. That's that weekly market structure. So come back negative 36% lower 3 months later. Oh, by the way, your weekly market structure analysis is invalidated. Dude, altcoins have gotten obliterated. Most altcoins in that same time frame are already down negative 60, negative 70%. You are not winning in an actionable manner based on that analysis. You are hoping and praying that the bull market continues to be a bull market, right? You're hoping and praying that the environment as a whole remains just as plentiful and abundant with opportunity as what it has been. That's what you're reliant on. So you are relying on the market to some degree. Instead, what I was saying is we lost a significant trend on this time frame. I'm allowed to assess the context of the analysis. It's a puzzle, and every single time frame is a piece to that puzzle. If I understand one piece and then I go and understand the next piece, I understand the next piece. When I put it all together, I can understand the puzzle as a whole. So I can understand that, yes, we are still bullish on a weekly market structure. What is portraying that idea? The 200 daily moving averages, right? And that's what I was using at the time. So if we were ever going to hold this structure, then maybe 200 dailies mixed with, maybe this demand zone, and clearly that's not what happened, or maybe even this demand zone, clearly that's not what happened either. Maybe that region will hold as a whole, and we can start to shift our 4-hour 200 MAs bullishly. It never happens. We never reclaim that high time frame trend, right? So there's no significant strength being shown. So we test the inflection point. Truthfully, back here, when I'm telling you, hey, a loss of this level allows for, a negative 20% pullback, you're going to look at me and say, Mercury, did you forget we're in a bull market? Did you forget that, for the entire past month, we've gone up 60%? And basically that means that the market can only ever go up 60% every single month, from here on out. Did you forget that that could happen? No, I didn't. Actually, I am being very realistic about whatever the market is doing. So I target that inflection point. We move negative 20% lower. So my analysis is played out. That then allows me luxuries. Okay. Luxuries like, do I want to buy the 200 daily moving averages? Do I want to bet on the weekly market structure to be maintained and hold a higher low and then eventually reverse and reclaim higher time frame trends and blah, 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 blah. Do I want to bet on that? Right? It's not, oh my God, I never knew that price would get here. Do I add more to bring down my liquidation price? Do I cut now and hope and pray that we go lower? Do I just do nothing and hope and pray that the market reverses? I'm not doing that, right? I've allowed myself luxuries in terms of options that I have available to myself. By the way, if we never got here, I would just adapt, right? And oh, look at that. We reclaimed 4-hour 200s. Okay, cool. So might be able to go up again, right? Hey, here's the irony. If you wanted to go up, right, towards infinity and resume the bull market and go to 100K and blah, 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 what do you have to do first? You got to reclaim the 4-hour 200s. You got to put in a higher high in your daily market structure. You have to reclaim, 60K supply zone now. oh, so if you can't do any of those things, there's no reason for me to assume that we're just going to continue upwards towards infinity, right? Because I was the advocate of, hey, we're going to continue upwards towards infinity here, but I was also saying that since here. So that's the point, right? I'm just adapting and shifting with the trend. I'm very contextual about the way that I'm assessing the market. I break down those puzzle pieces and I understand each one with the utmost clarity. When I put it together, I understand the puzzle. So that's the issue, is that I'm not using inactionable analysis as the way of how am I going to take action on this market. No. I'm targeting an inflection point. And either we get to that inflection point, and by the time we get there, I've allowed myself luxuries like, do I want to buy the dip along 200 daily moving averages? Because now, if you zoom out on this time frame, it actually is a dip. And obviously we would call this a deviation, a fluke, a fake out, a bear trap, whatever. We would call that a dip, but it's only a dip on this time frame. So look how far you have to zoom out to be able to call that a dip, right? Everything else is a downtrend. This is a downtrend. A 4-year-old knows which way that this chart is headed. And yes, I understand based on the current context for BTC that relatively this is sideways. Yes, I get that. I understand. But my trend trading system has not been invalidated once until this region, until that most recent breakdown. So that means that a trend style analysis was applicable for this entire period upwards, even though it takes about 2 seconds for a 4-year-old to say, yeah, that's sideways. So from a systematic kind of a standpoint, I'm allowed to assume a directionally proportional kind of move. What the hell does that mean? It means that if we got a 2-month-long 65% uptrend along 4-hour 200s, now that we break down below them, I can assume a similar kind of move, but just inverse, right? I say the same thing here. It's not what happens, okay? I'm giving you some grace here because we move negative 10% lower immediately after. By the way, the snowball starts somewhere else, right? So hourly 200s get lost. We deviate back inside of the range. So the weakness starts to come in. By the way, that was the spot ETF announcement. And your boy predicted that that would be a sell the news event. And in my opinion, it was, right? We absolutely got the first drastic pullback in 3 months after an 80% rally. So in my opinion, that was a sell the news event. So my speculative, kind of thoughts got played into and came into fruition to a greater extent because we lost hourly 200s. That's that snowball. We fall back inside of the range. That's that deviation, allows you to assume range lows. And we lost 4-hour 200 moving averages as well. And then thereafter, we went on to put a lower low in the daily market structure. So if you go back to that time, what I'm saying is, I think we go to 200 daily moving averages. I think we reach whatever the next inflection point is. And in my opinion, that would be the next inflection point. And, that's what I'm targeting. And unless you show me strength on a significant time frame, I'm going to continue targeting this region. And we never get there. So surely that means that Mercury is coping and complacent and having fun staying poor and he's left on the sidelines and blah, blah, blah. No, that's not what happens. In order for us to go to, let's say, this resistance level, and we're trading here, what needs to happen? We have to reclaim hourly 200 moving averages. You have to get back inside of that range, right? You have to deviate back inside of the range by reclaiming the range low. You then have to reclaim the 4-hour 200 moving averages. You did. You then have to put in a higher high, right, on your daily market structure. You then have to break out of the range. So when all of that happens, I put out a video, 3-minute video on Twitter that says, hey guys, if it looks like a breakout, trades like a breakout, smells like a breakout, it's probably a breakout. We're probably going higher. Turn your brain off. Target top right corner. I can't believe that this market is being that kind to us. We get to run back the same playbook from all the way back here in October. We get to just say, number go top right corner, and that's it. And that's exactly what happens. So if we never reach the inflection point, I adapt. I'm reliant on my ability to adapt to the market. Here's what happens, and here's the honest truth. If, let's say, the market reverses without me, right? We get a 2019 China pump candle, let's say, and we just go 50% higher in one daily candlestick. Or even in this scenario, we break out of a range and it's not really a trade that I'm all that comfortable with. It's not really something that I can justify positioning into. The risk reward just isn't good enough. I'm not comfortable, with my analysis, whatever the reasoning may be, right? and I don't have the ability to position for that asset, for Bitcoin, whatever it may be. I am already in a state of balance. I'm okay if that happens. I don't need to catch every single move upwards. And thank God that I have come to this conclusion several years ago, because I've not been able to catch every single move upwards on BTC. And also finding a balanced state of mind. So all that means is having a ledger account, having investments, owning the asset that I know that I am emotionally attached to, in order to mitigate some of the emotions that are coming along when I go to trade that asset. That's all that means. So when I started doing that, it allowed me the grace to be able to adapt to whatever the market does without feeling like I need to adapt to every single thing the market does. I did not buy the breakout here. I did not own BTC anything more than my ledger account, my investments, which I don't consider as part of my trading portfolio. I didn't really own BTC during this leg upwards. There wasn't any trades that were taken here. So surely I'm coping and complacent and sidelined and having fun. No, I'm not doing any of that. I was trading altcoin outperformers instead, and I was having an amazing time doing so. Trading things like RNDR, which broke out and reclaimed 4-hour 200s as well at $4 and then went all the way up to 12, right? All the way into price discovery. So trading assets that are outperformers, I had more fun and was able to justify taking my bets on those as opposed to adding additional exposure to my BTC holdings in, something that I'm already invested into, even though it is bullish and I'm quite literally the person who is adamantly saying we probably go much, much higher for BTC. So everything is about having a balance. Unfortunately, humans only have the ability to think in extremes. So if I say, hey, I'm bullish, you're thinking, okay, he thinks that Bitcoin goes to 250K. If I say, hey, I'm bearish, you think that, I'm thinking that Bitcoin goes to 10K. That's not really the case. That's not how my brain works. So I know that tends to be the way that people portray themselves on something like crypto Twitter, but that's not really how I'm thinking about the market. That's not going to provide any value to me by only being able to think, 0 or 100. That's not the reality of markets, truly, because only very, very few times are we ever bearish on all time frames or bullish on all time frames. And those are when those extremes are applicable, when I can just outright say, I'm bullish because we are uptrending on every single time frame. And guess what? I'm saying that here at 73K, but it's also true at 45, right? When we break out of ranges, we shift daily structures bullishly, and there's really nothing to stop us from heading into the next resistance and the next one and the next one after that. And eventually we don't have any more resistances. We can target price discovery. So there's very, very few times in the market where we actually get to play into extremes, or something like 2022 bear market when we're downtrending on every single time frame, right? There's very few times where I can actually say that. So everything else is more about the 90% of the market that makes up a contextual, hey, I'm bullish on this time frame, I'm bearish on this time frame, we're sideways on this one, we're bullish on this one, we're bearish on this one. And you have to piece it together to get an understanding of the puzzle as a whole. So I wanted to make this video pretty quick. It is kind of just a Bitcoin update. I'll try and get it uploaded pretty soon, so it's actually relevant by the time that you watch it. Please note that Bybit is sponsoring an iPhone 15 giveaway for any users that submit the Google form, which you can find in the description below. It's super easy. Even if you're not on my Bybit referral link, you can still be eligible for that giveaway. You just have to submit your user ID and the email address that's associated with your Bybit account. In addition to that, I do have a private group that most people don't know about. And in order to get access to that private group, all you have to do is trade on either my Bybit or my Phemex referral link. In that private group, we host live streams 3 times a week. We do daily market updates. I show all of my trade setups and ideas in the market. We talk about airdrops, we talk about NFTs, and every single week I give you my top altcoin picks heading into the next week. So if you're interested, you can find my referral links for either Bybit or Phemex in the description below as well. And with that said, I hope you guys enjoyed the video. Much love and take it easy.